Hello, everybody, and welcome to the RJO Futures Market Commentary for the week of November 3rd. My name is Toby Gennaro from Trade with Precision, and we'll get to the charts here momentarily and talk about what's upcoming for this week. Before we do that, let's take a look at the month here, see what we have lined up in terms of webinars. Next week, on the 12th, we have Begin Trading Futures Like a Professional, and that'll be coming up at 7 p.m. Chicago time, Central Time on the 12th, and then on the following week, the 19th. Same time, we'll have trading opportunities for busy people. Great opportunity there to learn how to trade around, a working lifestyle, swing trading, intraday trading, those kinds of things. And then wrapping up the month on the 24th. We usually don't do sessions on Monday, but we'll have one on Monday. That'll be at 7 p.m. Central Time, and that'll be trading futures. So we'll talk about the futures markets, how they began. We'll talk about futures contracts, what those are all about, and show you a trade strategy on those. So a couple of great webinars coming up this month. Check out the RJO Futures website and get registered for those and join us. It'll be a great time to learn more about your trading, take your trading to the next level. So without further ado, let's get to the charts and see what's on tap for the markets this week. And getting started here, then we'll look at the broader U.S. equities markets here by utilizing the ES Futures contract and take a look at that S&P 500 index. And we just got a nice closeout of a monthly candle right here. Beautiful trend. I haven't had a pullback into the zone here for quite a while. Finally got this pullback right back in and amongst that buy zone between the 10-20 period moving average. Didn't hang around there very long. Pretty nice rejection candle there. And we're basically back up to the new high. Actually broke the new high with that candle. And we're looking for the candle closeout and then potentially the break of that high. Normally we're looking for a smallish type candle in and around this buying zone. We didn't get that. We got a larger candle. And as you can see, deeper pullback here beyond the swing low on the weekly chart, but still got the V-shaped recovery as we've got on a lot of these pullbacks into that buy zone. And so right now we're looking back up at the most recent high. That most recent high was right around 2014. The current high closed out around 2016.75 last week. So we've broken up through that high, and we have another lower high on the indicators. Actually, with this most recent high, we have a pretty steep divergence here, and then with this second high, we have even some more steeper divergence there. So divergence getting pretty steep there on the weekly chart. Everything's still converging or even flat. Pretty good on the monthly chart. Going down to the daily, we're converging up along with the price action, so that's strong. And then you can see that trend of higher highs, higher lows here on the 8-hour chart looking pretty good. You got a little rejection candle over there. The overextension not too bad on the 8-hour chart, but we do have quite a bit of overextension here on the dailies. I'd be looking for a little bit of a pullback here. Since we're in at a significant level, I'd be looking for a pullback off of that level, maybe back down into some of this congestion around here. Some of these levels, maybe around 1996. There's some levels in here around 2002. But ideally, a pullback, maybe back down into this 1978 level would be, into that zone would be optimal. Right here, looking at the 8-hour time frame, just to get us back into the moving average zone on the 8-hour would be very reasonable. Looking at this level here, right around 1985. Would be very probable. We're not too far away from there. Put us right back into that zone. Nice convergence of the indicators and price on those indicators there. And then as we can see, looking at the 240, the 120, be looking for some definite setup candles in and around that buy zone. We're so close. Moving averages are catching up to the price, and that looks ripe for a pullback into that level. Again, we have that level right here around 93, and then some more levels in and around that 1985 level, and all the way down to 1980 as well. So we're looking for some of those levels in the upcoming week for a pullback and then a setup candle with that trend flow trade strategy that we're teaching in the advanced strategy course. And you can take advantage of that on a monthly basis to learn 2 new trade strategies to have in your bag, take your trading to the next level. And we'll take a look at gold right here. Looking at the mini contract, the YG, a number of different contracts you can trade gold with. This is the smaller one, more based for retail traders. But this level right here, right around 1186, we had a couple of touches right there. Moving averages all rolled over, the 50, the 20, and the 10. Had another touch along there, kind of hovered along there before this monthly candle basically broke through. So we had a nice lower high in between there. A swing high here, actually two lower highs, and then a breakdown in here, and now we're currently below that level at 1169. Looks like the market's going to go for a nice rollover. Typically, we'll look for some support down here along these levels, 1081 down into some of these other levels around 1033. Create kind of a zone for potentially a bounce around there. If we come up, get a retest, any retest of this 1186 level, more than likely to be met with some selling pressure, and the market will then roll over and potentially continue to the downside. So a little bit overextension here on the weekly time frame. Don't like that too much, but again, the higher monthly time frame breakout on that could move for a while. As we move down to the daily chart, you see we do have some overextension, but all the formations on the moving averages, even on the 8-hour time frame, just look great. Do have some overextension here. We could get some bounces up, but I'd be looking for any sell candles in the zone on the 8-hour time frame, and even going down more than likely to the 240-minute time frame. Anything coming up around here to some of these levels, like around 1195, more than likely might peak up through that 1186 level. But anything up around that level should set up a rejection candle in the zone. Then we should be moving lower for another move down on gold. So overall, gold's setting up on a pretty high time frame there. The monthly chart with a couple of touches of flat level. Moving averages rolled over, looking for a breakout to the downside on gold. And the last market we'll take a look at here is the mini contract for crude oil. We're all enjoying the low gas prices here with the decline in crude. But as you can see here, I've got a number of levels drawn in through, going all the way back to 2010. I mean, yeah, 2010, 2011. The high there has really been around that 104. We've had basically one or maybe two moves above that level, but for the most part, we've been between 104 and the 75 level, and even more closely right around this 80 level, which is where we're at currently. Finally closed out that month candle. Didn't get much of a bounce off that 80 level. We got another candle forming here for the new month. But you can see we've had multiple touches in and along there. Some breakthroughs all the way down to the 75 level. I'm really anticipating that we're going to get down to that 75 level and at least retest that level one more time. We've got all the moving averages kind of pouring out like a spout right there. The 200, the 50, the 20, and the 10 all in alignment. Overextension there from moving averages, not too bad. And looking at the weekly time frame, boy, moving averages pouring out really strong in order. A little bit of overextension there, but not bad at all. Things are really looking to move lower here on crude. And looking at the daily chart, a couple of touches here and on a flat level. These two very precise. A couple of ones peaking right through that level there, right around that 79 level. But it looks like we've got a swing high right here and then some lower highs built into that, looking and moving down into that level, eventually looking probably to break that level. Divergence here not looking too bad. A little bit more divergence here on the 8-hour time frame, but it looks like on the lower time frames things are converging pretty well to the downside. We're getting these setup candles in the sell zone. Couple of touches here. If the market breaks that level, more than likely we're moving down to that 75 level. On the 240, the 120, we're still getting these setup candles in the sell zone once again. Everything converging to the downside, even on the 60-minute chart. Even if we got down and retested 79.5, don't believe we'd get any divergence on these time frames, and everything would still be converging to the downside or going in the direction of the predominant trend on the higher time frames here. So I hope that technical analysis helps you guys, and we'll look forward to speaking to you again on the next market update.